Rahul Sharma joins us on the technicals. He's joining us from JM Financial. Rahul, hi, good to be speaking with you. Well, it's the day of the expiry. It's the day when macro cues are calling the shots, and you have the markets under pressure. Though there is a bit of a very range-bound action that we are witnessing right now. What is the important floor to watch out for, and what now becomes the roof for the market?
Yeah, so one good thing about after the event yesterday in the US is over the next 15 to 20 days we don't have any meaningful event, which means market reactions is something that could is something that will be out of the equation. Now, the way we have been positioned, especially along with the US markets, we feel that we should outperform the US markets going ahead from here. Now, 23,900 is a very crucial support for the market as we speak. And in the first half, we've somehow defended that level, and Nifty has managed to sustain above that. Now, as long as this level is sustained, we are hopeful of a recovery from here, and which means a bounce back could be a sharp one as well. And mind you, today is the weekly expiry as well for the Nifty, and 24,000 put options is somewhere where there is a lot of open interest which was built as we went into yesterday's session. Now, the point here is structurally, this could be a market where choppiness could continue, meaning range bound movement is something that we're expecting at a broader scale. So 23,900 to 24,000 on the downside, 24,800 on the upside. This is something that we're expecting the market should be over the next 10 to 15 trading sessions. Now, once January kicks in, once the quarterly numbers starts kicking, that could be one area where markets could look for fresh triggers. And if the numbers are higher than expectations, that should call for a broad-based recovery in the market, which means that Nifty could be back to 25,000 in no amount of time. So at this point in time, keep an eye on the 23,900 level on the closing basis. As long as we are above that, we should be fine.
How's the pharma index looking like? This index has been outperforming the markets for the last couple of sessions. Strong buy flows have been indicated when it comes to pharma index. How is it looking on the charts?
Yes, absolutely. The pharma index in the last two sessions have really taken off, and we feel that as a defensive, this can play very well in this period of 10 to 15 days where we are expecting that the broader market may not find any proper direction. So pharma looks pretty solid at this level. In fact, today we've seen a breakout above the 22,500 mark on the pharma index, which means about 800 to 1,000 point rally is very much on the cards in the pharma index over the next 1 month time frame. So, in fact, the stocks that look good from today's perspective are also from the pharma pack. So, one stock that we like in this space is Mankind Pharma. The stock has sort of bucked the trend and outperformed the index. Now we feel that it is ready for a newer high, and one can look to buy with a target of 3150 on the upside. About 10 to 12% kind of an upside can be expected from current levels. Stop loss can be placed at 2,700, and we feel this stock can do. Another stock which looks good in this space is Torrent Pharma. This stock has also come out from a recent consolidation, and technically speaking, this can also go up by another 10 to 12% from current levels, and can be bought with today's day low as the stop loss. So these are the two names from the Pharma pack which look good, and Pharma index which should continue to do well over the next couple of weeks at least, is something that we have on minds.
Point taken. So that's about pharma, but is there a breakdown which we are witnessing on Bank Nifty? Because that one was outperforming and seems a bit of a reversal right now.
Yeah, so Bank Nifty has been a cause of a concern. Now, yesterday's data was quite negative given the aggressive short built up, plus quarterly low put call ratio was seen in Bank Nifty, along with the IVs also spiking up. So it's going to be volatile for sure. But we believe that 51,200 around which we've formed the low today should act as some bit of a respite, because if you see the daily charts, there is a gap on the daily charts which was formed on the 25th of November. This gap gets filled around the 52,300 odd mark. So that gap is almost done today, and we feel that now I think at least structurally speaking, there should be some bit of a stability that should come back into the banking index from these levels. Now, whether a V-shaped rally recovery will happen or not, only the markets will tell. But at this point in time, the risk reward seems to be favorable, especially if you have a slightly more broader outlook of at least more than a month. Then I think this is a good time to be accumulating long positions in the banking index.
Right. Well, thank you, Rahul, for joining us and giving us your perspective and your view on the markets. Moving